happening in New York or across the globe. Learn why it matters first on Kevin McCullough Radio.
So very glad to have you with us. It's Kevin McCullough. Grateful to have you here. On Mondays, we always like to take a real up-close look at what's going on money-wise. And this is a particularly kind of cool Monday because it happens to be the 500th day in office for one Donald J. Trump. And I've been reading some polling this morning and some other things. There are some historians that are saying he's tracking ahead of where Ronald Reagan was in his first term as president. That's pretty big shoes to fill. But let's get my next guest's opinion on all of this because it all matters. Your money matters to him. He wants you to help be as wise as you can and as helpful as he can be to help you find that wisdom. David Fischer is his name. He's the CEO of Landmark Capital, and he joins us on Mondays. David, it's good to have you back. Just had you on the weekend show on Saturday. Good to have you back here on Monday again, too. It is the 500th day. What do you make of Mr. 500 as of today?
Well, I think there's been a lot of benefits that President Trump has added to our country. I mean, look at how much the economy has grown. Look at how much stocks have gone up last year. He implemented tax cuts. I mean, this is the president that said what he was going to do. He is actually doing. Unemployment hit an all-time low at 3.8% last month, the lowest since 1956. We added 225,000 jobs. The estimate was 190-some thousand. So, I mean, he's breaking some records here. And he gets a lot of accolades. There's some things that I don't necessarily think he's hitting all cylinders, but time will tell that. I think he's a little bit off on tariffs, and the debt of our country is not even being addressed, which is one thing he did campaign on. It's doing just the opposite, is ballooning along with Treasury. So I think that's going to be a big problem in a couple of years.
All right. Let's talk about tariffs for a second. I said from the beginning they were going to be a bit of blusterbuff. They were and worked with China in that way, but the Europeans did not respond in the same fashion. What would you like to see them do, David?
Well, tariffs have been proven that they don't really work. They really lead to higher price changes, which can be interpreted as inflationary, and this is a huge negative effect on the consumer. Most economists don't believe that this administration is disrupting trade by doing so is actually going to be a beneficial factor of the economy. In fact, just today, 45 economists of the N.A.B.E, National Association of Business Economics, believe that continuing with this whole tariff idea, it is going to be a contributing factor that will lead us into a recession because the world he's disrupted the world of trade, and that does not help our United States in growing our country. So is there other ways? Well, I don't know if I would put tariffs against our biggest allies like Canada and biggest trading partners like the EU. I would continue with what he's doing with China. I'm fully in support of that because of the trade imbalance, and I think we can get that a little bit better. But we're fighting a cost of living, and our wages are much higher here, and plus our dollar is much higher. So those are some factors that will absolutely are built into a trade deficit that we will always have unless we lower cost of living and lower our currency.
Yeah. Well, and you talked about the debt issue, too. We can address that as you'd like. I know we ran out of time last week. You were talking about the Volcker Rule just as we were ending. Explain what it is and explain why you think it is significant.
Well, it's important. It's huge. Put into perspective, Glass-Steagall was implemented in 1933 because we had a stock market crash in 1929 because banks leveraged money. And we didn't have any crashes until 2007 as a major one. And that was because the Volcker Rule, the Glass-Steagall rule was lifted in 1999 under President Clinton's administration. After 2008, with the crash, they implemented a thing called the Volcker Rule, which is a paragraph saying banks don't use our money and leverage money in the market to dictate the direction of a market. So they restricted that. There's benefits for that. We've had market sensitivity. We haven't had any crashes. We've been long over for a correction, and it hasn't really crashed. I don't expect one coming in the near future, but I do see a major market correction because they've lifted the guidelines, and they're giving the green light to banks do the same thing that they did prior to 1929 and prior to 2007 all over again. So there's some benefits. It will lend money into the economy, which that's the benefit, and they can still do that without giving banks leveraging ability to crash a market or influence a market, they should lend out money, and I admire President Trump for doing that, but I think we're throwing the baby out with the bathwater.
You talk about debt. You think it's more critical now. Why?
We've never had our debt balloon. We never had the Treasuries balloon 300% since last year, and we never had a sell-off on the dollar by the Federal Reserve, all happening at the same time. That equates a financial dilemma, which will happen with higher interest rates when we get into next year. So, that's why economists are saying 2020 will be the year we're going to have a correction.
Well, and it's one of the reasons why, friends, you need to protect yourself and get into a position of strength before that happens. You've got a new white paper coming out next week, David. What's that going to be about?
Well, it talks about the Volcker Rule. It's called Lock Your Doors to Keep Honest People Honest. And actually, it came out last Friday, but it's still available. It's free. It's a monthly newsletter. And it also talks about the market volatility, what we've been talking about with the Fed unraveling the balance sheet. And by the way, that might be factored in to the market because we don't see a downturn happening today. So that's good news for the market. But the Volcker Rules explains there. It really helps people understand it and get engaged in how to be properly protected.
And that's what you want to be, friend. You want to be properly protected. So many people that have listened to David on my broadcast have called him and said, David, you keep talking about things that keep coming true. And he doesn't claim some sort of supernatural prowess over any of this. He's a student of history, and he's observed things over 25 years of doing this great job. And so he's willing to put that knowledge to work for you. You get that white paper and the one called Time Is Up, Which Bubble Will Burst First. All of that in the 2018 Financial Survival Guide. So you can go on am970theanswer.com, click on the coin, fill that out there. You can also do it on am570themission.com, or you can call their office, 844-604-2575. But do that. And when you do, you're automatically registered for your chance to win the 1876 $20 1-ounce gold piece that we're giving away on July 6th. It's a beautiful gold coin worth about $1,800, and you could be the winner of it. AM970theanswer.com. I'm Kevin McCullough. Dave Fischer, thanks so much.
Thank you, Kevin.